Good morning. 22nd of January, 2026, Central Standard Time. All of my charts and my references here with the voiceover are Central Standard Time. So welcome to This is Risk Neutral Trading. It is my virtual trading journal. I trade live, funded account, funded by me on through AMP futures with rhythmic data. Now, I'm not licensed anything to do with trading or finance, so I don't intend any part of this to be financial or trade advice. And you can see a disclaimer in the description here. As I said, it's my virtual trading journal, so it's completely transparent. As I'm trading or anticipating trades, I narrate fully, and with, there's nothing held back or behind a paywall. So it's, I guess that's a little complicated to explain maybe, but I don't find a problem with that, so that's where it's at. I use Bookmap here, which is my primary execution platform. This is the ETH session so far this morning. Here's where we're trading at this moment. Here's the previous RTH session high. So we are looking at a gap open, depending on if they stick up here or not. And this is my other charting software, which is IRT, Investor RT, right there by Linsoft. Both of these are paid subscription things, unfortunately, but that's the way of the world, isn't it? And you can see what the previous RTH session was yesterday, and then here's the announcement that there's not going to be tariffs on Greenland. And we picked up the pace and have traded up above the previous high when London kicked in. So there we are. Let's get on with the usual. I try to keep a kind of a similar cadence every morning with this pre-market. Let's look at reports and numbers, which are the real important for us as traders. First, I use two news sources, and both of them, the version I have here, are free. My thinking is that I want any tools I use to be available to anybody that joins the stream or that listens to it, to try to help anyone out that I can. And of course, you can pay for it. I'm sure they'd be tickled to death. But these advertisements flashing around here don't bother me at all because I'm focused on the numbers or the reporting that's going to happen for the day. So here we had the GDP, initial housing claims, core PCE, and we've had those numbers already so far. Now, we basically don't. We have the PCE index that's going to be out at 9 o'clock, and that's kind of the next one. But I want to use extreme caution. Don't Davos, as you see this little good-looking gal over here chatting it up with somebody. Davos is underway, and that's where the huge bump came yesterday when Trump, in his speech, said that, or his address to them, said he was going to not move forward with the threatened tariffs on all the EU and any country that supported Greenland. So, huge bump in the market. This can be filtered for any time zone or reporting that you're interested in. If you live in Kuala Lumpur and you only want to listen to the Nikkei, well, then you can do that. And again, free. Also, here with investing.com, which is my older source, it only reports scheduled, typical, traditional economic numbers and reporting events, non-farm payroll, GDP, PMI, all those kind of normal things. Now, the second news source that I use is Financial Juice, a completely different format, obviously. And the thing I appreciate about Financial Juice is they pick up and add to the calendar random things that aren't typically normal, traditional economic numbers or reports. Trump's going to have a signing, or Trump's going to have a speech about something, things that we have recognized as traders in this current environment could have a potential impact on the auction. And they pull those into the calendar, which gives you a little heads up, which is great. The right side over here is more of a squawk box where things are kind of automatic. Sorry, I got a sneeze-a-thon going on here. I hope I got the mute buttons on time or you're all deaf. So, yeah, that's where we are for the news and reports. Now, let's move on. Let me say one more thing about investing.com. Also, we are in earnings season, and here are the earnings reports for the week. You can filter them however you want to have them, today, tomorrow, next week, whatever. The sun icon represents before the open, and the little quarter moon is after the close, or after 1500, and you can see who's going to report. Another thing that's very important, I believe, with investing.com, for example, initial jobless claims. If you see how it turns to an icon or to a link, you click that and you get the complete detailed breakdown as soon as the computer wakes up. All the jobless claims, who puts out the report, anything about them. You can go directly to the Department of Labor and see the report as it's issued by them. You can see historical stuff and what the previous ones were, and drill in as tight as you want to get to understand these various important news releases. And it's really important to understand them. Non-farm payroll, and well, it's really important to understand them and to be aware of the real biggies: non-farm payroll, GDP, GPI, etc., or whatever I'm talking about here. All right. Let's look at the pre-market, which is what business is about, isn't it? So, yesterday, close, open. Where are we? Well, if you have to just rough it in, we're about 100% inventory long all night, with a big bump when London kicked off. There we go. Now, what does that tell me? I'm trying to make this a little bigger. Spread these candles out. There you are. And by the way, this is IRT, if I forgot to mention that. And this is the, I should start from the basics. I'm sorry. If you look at any of these charts in IRT, you can see the instrument, the chart type, the periodicity, and the session. Now, these are the micro ES, micro NQ, the mini market profile, and the micro higher time frame chart, which I refer to as a micro composite. I'll talk about that in a second. But I also plot the same configuration for the minis. Just FYI. So back to the case at hand. We're about 100% long inventory all night. Typically, when we're not in such a hyper news, impetus environment, I would be expecting some responsive selling to take profit. You know, if you were long all night and had made money from 69.20 up to 69.58, say 40 handles, wouldn't you want to take some profit? I would, and I would suspect that many other traders would as well. So that would be my initial response on the open, and then it's, you know, mind your risk. Absolutely keep your eye on the news, and be real careful in this news-rich, who knows what might happen next environment. Okay, back to the charting now. This is, again, my micro composite chart, which is my higher time frame chart. It is the RTH session only. Again, it's the MES daily candlesticks. And wherever price overlaps, I pull a volume profile around them, like this or like this. And in so doing, it generates the micro composite volume point of control, the micro composite high and low volume nodes, which are just the low volume, the high volume, the low volume, the high volume of this most current market profile or volume profile. Now, those high and low volume nodes are pushed automatically to Bookmap, as are my session prices here. Let's take a quick look at volume before we step away. Well, we're at 128%. Volume's been holding up. Yesterday was 149 at this time. This is looking back over 20 days, 1 minute candle. So let's look at the Bookmap. Stand by one. All right, Bookmap. Well, first, it's important to understand that I want to have all the data I feel important to trade right here on the hard right edge. So I have my Bookmap laid out like this. Here's the dome or the price ladder or the order book or whatever you want to call it. These are the prices for the micro ES right over here. And this is resting liquidity at resting orders at every price. This is the micro composite chart where I have manually entered those values, as I mentioned earlier. And these are the high and low volume nodes, which push automatically. This is the full session volume profile, which started plotting last night at 1700. And the RTH volume profile from yesterday, which will reset today at 8:30. It's continued to plot through the overnight, so that's why it doesn't stop at the previous RTH high, and Bookmap just doesn't have that facility that I am aware of. This is my high time frame statistics column, which is pretty important to me. I'll talk about that in a second. And this is the IRT session prices. So these prices started plotting and pushing with the ETH last night at 1700. We'll continue through 1600 today, and then away we start over again when the session break. I push these every day, every week, trading week, from 1700 on Sunday through 1600 on Friday. If you're interested in them for free, I'm happy to share them. Just let me know in the chat. Like, subscribe, and drop something in the chat, and I'll hook you up with the link. It comes from Google. I push up to Google continuously 24/7 until Friday. And you can, or 24/5, I should say, or 5.5. And I'll hook you up with a link. All right. Notice that there are no indicators or super secret magic stuff going on my bookmap or my IRT. I try to keep my approach to the market as simple as possible, only using price data, probabilities, statistics, and discipline. Now, this is Blue Boy, which is a joke. It's nothing more. I like to joke that it's a real expensive indicator. It's nothing more than a vertical line in Bookmap that I put on the first print of each session. You see there's the RT, there's the ETH, there was the RTH yesterday, and on and on. And that lets me know when I glance left, if I see Blue Boy over here, I know I have the entire session in view. And that's what I want, to have a firm understanding of context. All right. There is only a POC, which is a little muted yellow there. That's the full session POC. Way down below us, here is the RTH session POC from yesterday. Come on, right there. POC is nothing more complicated than the price at which the most contracts have traded so far in the session, period. 69.5. 3,444 contracts. The minute some price trades 3,445, this yellow line's going to move there. Very simple. This is a Globex VWAP, volume weighted average price. RTH session, volume weighted average price. And the mid. Now, we do have a couple other values that sometimes the rest of these session prices are just, abbreviations of their name. There's yesterday's close, RTH close. The IB high and low are sometimes confusing to people because of the naming from the market profile world. Initial balance. What these two levels really actually represent is nothing more complicated than the high and the low of the first 1 hour of the RTH trading session. Boop, that's it. Okay, now, having understood that stuff, let's look at the statistics. The first thing I do is determine what the opening statistical open for the day is likely to be. Here we are trading. If we opened right here, right now, how would that price compare to the previous RTH close? Well, there's a close. It's very definitely higher than the close. How would that price compare to the previous RTH range? Well, we can't see the low, but we can certainly see the high. It's above the high. So we are higher out of range. In other words, it's a gap up. So I change the column title every day to the open type that will happen. And I do that because when I look at a screen snap or the stream, I can see the title of that column and I know exactly where the relationship was from the overnight to the open or to the RTH session. And that's what dictates the statistics. Okay, and the statistics come from, where did we go? The statistics come from this chart. Here we opened yesterday, higher in range. Now the IRT conveniently highlights the correct open type, but that will not be until 9:30, okay? So we've determined just now that we're going to open higher in range, which is a gap up. The computer looks back at the most recent 1,660 days. That's the sub data set. Of those 1,660 days, we opened the overnight, we opened higher out of range 417 times. And we price revisited the overnight volume point of control 323 or 77.5% of the time. Overnight volume point of control, 77.5. And that, boys and girls, is just as difficult as it gets right there. Now, these are not hard, fast targets, guaranteed lines in the sand. These are probabilities. You need to be really aware of that. And now I'm just going to go down the list. The next is the overnight high at 75.1. Well, that's right up here, isn't it? Because that's where we're trading at the moment. And that could very well change. It's a dynamic market, isn't it? So there you go. Man, boy, I wish I'd get those lined up right. Now I have to do one other thing here that I do every day at 8:20, which is the TLab snap. And that comes from this tab, TLab. You see that right there? What in the hell is the TLab? Well, it's a bookmap Discord chat room. Started and continues to be led by a fellow named Tom B. And every day I put 2 snaps in there. This is the one at about 8:20, and earlier was the was the reporting. Now I'll move the screen focus so you don't have to be paying attention to that. While I do while you see, this is why I stream, because I'm not Mr. Multitask, right? So I do this to put these snaps on every day. I do one at about a little before 6, and then I do this one at 8:20. Okay. Now, what is the TLab? Well, it is a bookmap Discord chat room, as I said, started and run by a guy named Tom B. Tom is a self-proclaimed professional trader with 40 plus 6 years of trading experience, and I believe that's the truth. Does he show audited financial statements or, broker statements? Does he trade live? None of that. No, he does not. But I believe that it's the truth. I mean, there's some point in time when you got to just fish or cut bait, right? You need to believe some people, and after you've lived a while, you can understand how to kind of filter out the BS a little bit, I hope. So what I do every day at 8:20 is post this snap, which gives everybody in the Traders Lab that doesn't have the same kind of charting a little bit of a leg up with all the numbers and values that they may find interesting. And again, the Traders Lab is run by Tom B. He doesn't trade live. He doesn't call trades. It's a Discord site. But you're never solicited for anything. It's sponsored by Bookmap, but you're not even solicited by Bookmap. And there's a good crew of people in there. I was active in there for a long time, and taking Tom's advice to focus on narrating the market, and that's hence this stream, actually. So that's my book. That's my Traders Lab story every day, and it's my way of thanking Tom for his efforts. Tip my hat, however you want to put it. Morning, Dan Tukali. How you doing? So we'll, here we are. We've done the TLab snap. We've done the pre-market pretty much, and let's do something that's pretty important here. I think you'll agree. That's be able to trade. So the way you do that with Bookmap is the first thing you must do is activate the trade control panel right here. You do that by clicking that padlock, and then you have to select a method you will use to interact with the Bookmap application to trade with your chart, or with your mouse, sorry. If you choose the chart column, then The only place you can trade with your mouse is this active data column right here on the extreme right. You notice how last price continues to plot, all the balls, everything. The mouse is a pointer. The minute you drop over that line, it's just the last price going up and down, and the mouse pointer turns to a dollar sign. That's it. If you choose DOM, the only place you can trade with your mouse are the DOM columns. And if you choose both, I suppose you probably guessed you can use either one. Next, I use and strongly recommend multi-brackets. Now, this is where the risk-neutral methodology, I apply it. And to start out with, the lowest or the smallest package for risk-neutral methodology that you can have is a 2-lot, because it needs to be an even number of contracts. 2-lot. Then you select a stop for the entire package, or both of our lots. And the first criteria that I suggest you use to determine your stop loss is your account risk parameters. You know, how much money do you have? How many stops can you take before you blow up your account? If you're trading a prop firm, what's the daily loss limit? You get the point, right? And you should definitely not be making this decision or calculation right now, 4 minutes before the open. This should be done during your homework period, in the evening, the early morning, whenever you do it. Once this is established, these two values, the first risk-neutral scale is automatic. It's for half of the package, and it's for the same number of ticks positively as the stop is negative. So the minute this T1 profit target is achieved, the trade is risk neutral, and the worst you can possibly do is scratch, unless you are a complete donut and you move your stop away from your entry, which is, you know, like the 11th commandment. And here's the runner. And of course, you can do any combination or any kind of way you want to figure this out. You can do it yourself. The two key ingredients are this package size, this first initial stop for the total package, and that dictates T1. In this case, there's 4 contracts, so T1 is going to be 2 contracts, positive 12 ticks. Real simple. And that needs to be, you need to determine that for yourself. Okay, next thing I use now is, I'm going to throw Execution Pro on here, because I want any trades I take, and I'll explain why I do this based on my back testing. Once T1 is achieved, 12 ticks, it's going to move the stop to break even. Close. Okay, now I have picked a package, you know, a multi-bracket. It's 2 lots. I can see that here. I have all my metrics displayed across the top up here. You can turn this off or on, by the way. So I don't need the metrics here. I don't use any more of the trade control tools. So I can click the button again. I get my real estate screens back here on my screen, and I have the exact same metrics. I have cancel all and close all. That's all I need, because I'm using multi-bracket. So now we're ready to trade. Once we open, I will put a new version of Blue Boy on the opening print, and then we'll be able to keep an eye on the entire context, because I believe that's really important. Again, we're going to be looking at a gap open, and how does that determine? Well, here's yesterday. Let me say this. A lot of people look at gaps different ways. In my world, I look at the previous high or low compared to the current session, RTH session open. So if we opened right here, and I've already put this flag down here. This is a micro composite gap low from yesterday. There'll be a gap high up here for the 20. No, I did this wrong. I'm sorry. This is the 21st. There we go. Because that's where we closed yesterday. When today's the 22nd. I thought it was the 23rd. Yeah, okay. These are some other, here's another gap we still haven't hit. Close, but we didn't get it from the 17th. Here's a micro composite from the 16th. Naked volume point of control. You get the point, right? So we're going to open in about 3 seconds here now. Let's see what happens. Let's see if this chooses to reset itself automatically, as it should. There's the open. It didn't reset. Now I will complain, bitch and moan. So frustrating. I don't know what that story is with Bookmap, but it's really irritating. All right, there we go. Boy, everything was stuck on that one today. A 45 millisecond delay. That means huge volume is coming down the pipe at this moment, which is not surprising. Here's our migrated. Our open is going to be right about here. That's going to be our gap high. Do I expect we're going to take the gap? Absolutely. You know, would be amazing if we didn't. So now the thing I'm going to do is change my RTH and my charting to the RTH session from the full session on IRT. So here's yesterday's RTH session, and here's our new open. Okay. And this is really slow going. And I have a pretty powerful machine here with 64 gigs of DDR5 RAM. I don't know what else I would need to do, frankly. So I just muddle along. Fortunately, as I mentioned in the pre-market, I only trade structured, vetted trades, vetted by myself and nobody else. So I know what the expectancy is, I know what the setup is, and we'll get into all that in a minute, but oh, come on. Yeah. See how it jumps and jerks around? I hate that. Anyway, that's good enough for the growth I go with. So there we go. Save that one. And yeah. Here's our open. This is the minis, remember? So let's jump back to the micros because that's what I'm trading with my live account over here in Bookmap. Now we've had a VPOC migration higher outside of wherever. The open is right there. So that is the, in my world, by the way, we're gap open. And we are open. I forgot to put that flag in. Sorry about that. So this is going to be a gap high of the 20 seconds. Do I think it's going to be taken out? Sure. Why not? Only a couple of points, right? This is kind of more or less just to show you how, or illustrate how I do this. Now, is this right? It looks like a little low. And I can look at my, if I look over here at IRT, I can see the open price if I wanted to screw those all up because it's tagged on the side. Okay, let's see what the hell is going on now. Well, be patient, use extreme calm. You know, remember that there are 3 positions in trading: long, short, and flat. And I should say, I guess up front, I always speak of this from my point of view, because obviously this is my trading journal. I approach the market as a basically random environment. I approach it from a point of view of probabilities and statistics, looking to lean on the law of large numbers. And I approach it, in so doing, I approach it as a business with the goal of which is, to rely on financially and to have consistent profitability. This is not a video game for me, or gambling, or any of those things, which are all fun and fine if that's where you're coming from. But that's not what I'm up to, so that's why I approach it as I do. I mean, after all. And now we're going to slap Blue Boy on for the morning. Don't watch here. This is top secret stuff now. That's good enough right there. So this will, anytime I glance left, if I see this guy, I'll know that the entire session is in view, and I will understand context. And here's our overnight. What was the thinking in the pre-market? That we would likely have some responsive selling to take profit, and which would in fact obviously close the gap. Neither of those have happened. We're only into the market 6 minutes. So hold on. Now we have news at the top of the hour, a scheduled report at the top of the hour. But in this environment, we have the potential for any kind of disruption to the market at any time, because that Davos thing is ongoing. Now, remember, they're in Switzerland, so there's a time delay. Pretty soon, those mothers will go to bed, let's hope, and then get back to normal. But at the moment, there we are. And what have I forgotten to do? Something probably. Okay, I've got my charting moved and redone to RTH. We've got the IBs high and low plotting pretty normally. That's kind of a wonderful thing. We tagged out the gap high from the 17th, which means our high here has tagged out the low of the 17th. Notice whenever I highlight on IRT charting, if you look at the info box, it gives you the date and stuff of the candle or the deal, whatever I'm looking at. So we have a teensy weensy gap close up there on that high. Okay, am I up to speed? Let's check. Remember now, got to scoot this up because the overnight high moved up. These are dynamic values, right? So this isn't cheating. This is being accurate. And I want these values to be accurate for the stream because this is my virtual journal, so I go back and look at this stuff. And the overnight high is the overnight high, so there you are. As is the overnight volume point of control, which we've not tagged out yet. And what's the overnight mid all about? That's usually a big one. That's usually a all right, now you notice that IRT has correctly identified this open type, so I was right. Isn't that cute? And here's the overnight mid, 66.5, right? So let's zoom over here and go 66.5. Previous RTH high, that'll be a 65.6. Developing value area low and high. One word about the developing value area low and high, and the I don't see one previous value area high or low, which is right somewhere. This yellow guy over here. Developing is for this current auction, and the value area high or low are for the previous auction. That's why I changed the charting back to to the RTH session only, so that the value area high and low reflect yesterday's RTH session, and the developing value area high and low now reflect the current auction. So there you go. What else we have floating around over here? Previous close 49.3. That's way below us, I think. Isn't it? I thought, yeah, there we go. 49.3. And what else we have lurking? There's one of the value area highs and lows down there. What do we have lurking up here? ETH low. $36.6. And that probably needs to scooch up a tick, I think. There we go. Okay, so these are the high and low volume nodes. These are the high volume or the micro composite values that I manually enter over here from over there. These are automatic. Session prices are automatic. And again, if those would be handy for you, you think, let me know. And I'm happy to share them. I start pushing them every Sunday at 1700 normal trading week. Oh, looky there. Somebody said something at Davos. Do. Do you suppose that had anything to do with anything? Of course not. That's somebody saying something as far as I'm concerned, but we will check the reporting story, the news story over here. This is from earlier, way earlier. So what's happening here? Has anybody said anything, which is, what a shock that would be, right? Anytime these fellas have an opportunity to get in front of the next thing we've got coming up is PCE. The next scheduled news we have coming up is PCE at 9 o'clock. So this is, somebody said something here that's a news bump. What? I don't know. Zelensky's talking about stuff. Praise God and pass the ammunition. Those poor people couldn't get. 4 years that's been going on. Can you imagine that? Jesus. Yeah. So they closed the gap, and they. Oh no, they did not. Look at there. They didn't close the gap. There's a previous high. Isn't that cute? I didn't even notice that. Okay, something's up. Well, let's just move on. This is why you always want to remember that your primary mission as a trader is to preserve your account, which means manage your risk. What good does it do you to have the most fantastic setup in the world and be broke, and not have an account? And we're going to close that. There we did. No, we didn't. Well, the gap news. Now we got it. Now that gap is closed. There we are. They're happy now. What a bunch of crap. Remember, your mission as a trader is to protect or, and the only way you can do that, in my opinion, is risk management. Think about it. How else could you do it? Risk management is it. What does that mean? Well, you limit the amount of exposure you subject your account to. What does that mean, really? Well, you don't trade like a wild monkey, Have a vetted setup with a statistical edge that you have identified through backtesting or whatever away from the live market, and focus on and take those setups, that trade. You don't just clicking and banging and whipping and spurring, in my opinion. And something big is going on here that this is not getting a hold of. IRT's still choking over here, by the way, so we're still getting a big data pump. Let's look at volume if we can get it. That doesn't seem very true right there, but yesterday we were at 149%, so there's a big sell-off. I'm not sure what the hell is going on here, but I'm pretty sure I don't like this. Doesn't look right to me. There we go, I guess. Yeah, selling hard. So you were all fat and happy, and you were thinking, oh boy, we're going to the moon, and now what? This is no structured trade for anybody. Nobody has statistics or has vetted a trade like that. There are a lot of internet guru people who, talk about opening range trade and all this kind of stuff. And okay, the way you vet a trade is you identify a pattern that recurs frequently. You identify the criteria or the rules or whatever you want to call them that validate an entry for that particular strategy or trade or setup, and then you copy or you capture a statistically significant data set of that specific setup and with those specific rules. And if you change the rules on any one of the trades within that data set, that trade has to be thrown out because the rules have to be exact and consistent. You know, after you've accomplished that, if you have a verified, mathematically demonstrated edge or expectancy, then during the live market, you take every instance of that setup that presents itself and you lean on the law of large numbers and that expectancy. Period. Or you like to gamble and you do good at that and click the hell out of that thing, you know? But I don't think that that has a long-term, that's not the long-term plan that I want to follow. In my opinion. I'm afraid that this is still got a big lag on IRT. Well, if the moon, yeah, if the moon's in the bottom, that's where we're going. Yeah. And remember that this thing could turn around and fly the other direction just as quickly as it did this. Okay, let me just see what's next on the agenda here. Remember, news at the top of the hour. Okay, have I got everything happening here? Let me just run around the horn. All right, so I've got the Execution Pro on the break even. You can also set this thing up to trail. This is an experiment that I haven't done before much. I've done this manually. And something I always forget, yeah, you got to have these little guys ticked or that doesn't work. Multi-brackets I've used for donkey's years, and I like them a lot, as I said in the pre-market. Okay. That looks right. I've selected both, so I'm firing on all cylinders here so far. That's cool. Now, there's guys in Statistic and around that are, they're firing on the bar trade off the overnight volume point of control and doing great, and that's great. If that's a strategy or a statistic that you have done the homework on, good for you. What I have done and am focused on is the initial balance trades, and I'll talk about that whole process in a minute. But so I have no trade to even consider until 9:30, and I'm not sitting on my hands. I'm watching the market. I'm getting a feel for the pulse. I want to make sure Blue Boy's not smoking cigarettes over here so I can see him where he's at. VPOC migration lower. Ooh, that's a biggie for a lot of people. And may well be for us in the market today. We just barely tagged out the 17th and down we go. Oh, one of the things I'll do now, which I just for the sake of this, whatever. My workflow on levels is as follows. When a level or a gap close or something like that happens, so it's no longer relevant, I change the text to black, assuming I can click the OK button. And then, today, this week, whenever, I will, what the hell is going on? I can't hit the target here. What is going on? There we go. I change the text to black, and when I have time, I delete the damn thing. Usually it's the weekends because I'm usually covered up with something else, but, There we are, the high volume node. Remember that they come from over here. They're pushed from IRT. The micro composite column, the most current. I have actually still got them on here. Let me show you how that works. It's still choking. I'm going to leave IRT alone. It's still swallowing data over here and having a hard time doing it, so I'm going to try to leave it alone. Be sure to recognize this is not anything. This is just normal price action. There is no initial balance statistic or level in existence. This is the initial balance or the IB low, which is just simply the low of the first 1 hour. The high of the first 1 hour. As price goes down, this level trails along with it. When the first 1 hour, i.e. 9:30 Central Standard Time happens, this doesn't move anymore. Neither does this one. At that point, the initial balance statistic kicks in, and that is the first rule or element of my initial balance vetted trades. We'll talk about that in a minute, but I'm curious to see what happens with this news, if anything. And that's going to happen pretty quick. So, hook in and hang on. And there's the news. They took out 550 and 524 stops, and they're hammering them. All those boys and girls that were thinking it was a great idea to trade the VPOC migration. Oops. What's happening now with context, if you had to ask yourself, what is context doing? Well, there's our open. Little pop-up. Lower lows, lower highs, lower lows. Looks to me like context is heading down. It is definitely doing that. What was PCE? I forget the news. Unchanged. The big thing that's happening now that I believe people are thinking about in the background. The authenticity or the accuracy of the reporting now, because it's been demonstrated clearly, I think, that that may not be as important as it once was to the admin, which is really disappointing to me. Oh, look at us go. Previous close down here, huh? There we are. Boy, I tell you, I don't know what's up with IRT. I'm going to do something here that I hope doesn't disrupt the world, but I want to look at what's going on with the, oops, wrong thing, sorry. This is Armory Crates, my motherboard thing with the, everything about my system going on here in temps and stuff, RAM usage and whatnot. So I don't get it. You know, it's 27% RAM usage, and GPU's only 20, and CPU's only 22. Why is this god dang thing lagging? I don't get it. You know, I don't get it. Now, this is thermal throttling possibility approaching over here. I don't know. Frustrating. Well, here we are. So, boy, they picked those stats off, haven't they? Boom, 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 boom. Overnight high, overnight volume point of control, open or something. Forget what. Mid. Close the gap. They've got the close. They've got the yesterday's close down below us. So 9 o'clock, the first brackets in the market profile. The A brackets close depending on how you start your lettering, but there you go. Now there is a statistic around the initial balance high and low to do with the first hour, and it's something that Rod cooked up, and I don't mean that facetiously. He does the stats, and I believe him. There's a very high probability that the high or low of the first 1 hour, of the first 30 minutes is exceeded by price in the second 30 minutes. So what does that mean? Well, here's the low. First 30 minutes, huh? And we exceeded it in the second 30 minutes. Doesn't say by how much. Same as the statistic, as the typical IB stat. But that is a thing, and it bears out. It has a statistical significance. TLab sometimes refer to that as the IB 30 because it's the first 30 minutes. The stat upon which I vetted my trade is the old-fashioned, reliable initial balance statistic, which is widely known and comes from the market profile days. Now, remember, this is not until 9:30 Central Standard Time or the conclusion of the first 1 hour of the RTH session, wherever you are in the world. And it's real simple. First, it's important to notice there's only 4 statistical open types. None of this, extreme days and all the open types that come from market profile. I forgot them right there, just a brain fart. But there's only 4. There's higher out of range, which is gap up. Higher in range, lower in range, lower out of range, with gap down. Yesterday we were gap low. Today we're gap up. Go figure. So the highest probability statistic to achieve in any one of the open types is the initial balance stat or statistic. And it's real simple. In today's open type, 97.6% of 1,661 days price revisited the overnight high or the overnight low at some point between 9:30 Central Time and 1600 Central Time. That is after the initial balance is set until the close of the session, of the RTH session. That's all it means. That's all it says. But it's 97.6%, right? So 2.4% of the time, nothing was achieved. And down here, you'll notice that 26.6% of those days, we got them both. 2.6% seems pretty, unlikely. That would be something you'd gamble against. About a month ago or 2 months ago now, we had a Friday, and that's exactly what happened. We didn't take either one of them. So that's the statistic, and it happens at 9:30, and that's what I will be looking for. That's the first rule of my what do you call it? Hooting in here. Trading my vetted setup. I don't know what it is about this Renko up here. It just doesn't look right to me. I don't know why. Probably just, old and crazy, I guess. That's always a factor. So we're having VPOC migrations lower consistently. The context should be no question in anybody's mind. At this point, so far in this session, the context is south. And we are fairly directional, right? We're not rotating. Now we're getting some rotation and fractals building down here at the bottom, but we're, pretty directional. So for my trade setups, the directional trade is the IB continuation is more suggested in a directional environment, and the IB failure, common sense, would be a balanced rotational one. So how does this whole thing I've got cooked up work? Well, let's look at that now, I guess. As I said, the initial balance statistic is based on the stat. It only happens at 9:30. And today's initial balance probability is 97.6%. And I've explained that already, so I forgot to put my timestamp down there, but there you go. Next, then, is my structured trade. And the first thing I need to do, this is the trading system that I have coded up and used to backtest. I'm now going to send this to this chart, which is today. Should be obvious. Meaning that, turn those off so that I don't have conflicting stuff going everywhere. Now, when all of these rules, or these particular rules to do with entry, test true, the system would enter a trade. And there are 3 rules, A, B, and C. I know, not very imaginative, but that's what it is. That's how I've done it. And they use the pullback and the continuation zone and the trigger zone around each of the IBs. There's only 4 trades, 2 around the IB high, 2 around the IB low. That's it. And I'll talk about the statistics later in the day. I mean, we'll go through the vetting process and the back test and all that. And I don't, again, this is just what I'm doing. So, hey, you got a better idea, I'm all ears. It's been very disappointing the last week. Supposedly this month should have been consistently profitable, and it has not been. Now, let me point out a couple of differences here before we get into the actual time frame. Simulated. That means that any trades taken over here in this chart on this live rhythmic data today is taken within the IRT simulated environment. That's the account I've chosen, because I definitely don't want this thing sending live trades to my brokerage account until I am completely confident, risk management, right? Till I'm completely confident that it's doing what I think it should do when I think it should do it. That was the purpose for me developing these custom indicators on this chart, so that I could see if things are happening when I think they ought to be. And you see fractals up here. I've been trying to look at different ways to filter and refine the filtering of the system to context. Now, and it's a work in progress. So one of the things that's important that I should say at the outset here, it does me no good. Well, let me start over. It's generally accepted that if you have a system that you have used to vet and compile statistics, the very split second that you introduce any kind of discretion, you've wasted all your time. Because in order to properly vet and determine a statistic, there has to be no discretion. It's got to be all exactly the same every instance, every occurrence of that data set. So that's the reason I'm trying to understand and develop something that I can code. I could certainly not take a trade on Bookmap if I don't think it's in the right context, but that ruins the whole purpose, right? And the way that I do this, and let me continue on, as I said, simulated environment. And now, so when there is a signal, an IRT, on that system, I manually enter the trade in my live account with my own dollars in Bookmap. And that's part of the problem, me getting it done that quickly. You'll notice that there's the continuation and pullback zones and things over here on the charting. At 9:30, they will start to plot on today. At 9:30, they will also push and suddenly become visible over here around the IB high and low. And I'm trying to condition myself or to train myself or whatever to recognize those specific criteria for those 3 rules. And I call them trade rules because that's what IRT says. Define trading rules. So they call them rules, and there you go. I call them rules. There's only 3. There's the initial balance statistic. There's a pullback or continuation zone. That's B. And then there's a trigger, and boop, Bob's your uncle, and away you go. Now, there should be what is this? Well, let's look at the stat quickly. About it. 75% win rate, 8 consecutive winners in a row, 1 consecutive loser in a row, or stop in a row in these 14 days of January so far. And the actual trade is absolutely not tested that out, or borne that out, I should say. Hey, Antonio, morning. You been up there to Davos hobnobbing with the big shots, have you? They've been all over the place today. As you can probably see, context is pretty much down. Yeah, so I'm pretty frustrated about this story, but I will continue to honor my commitment to manually take the trades without discretion on Bookmap that are signaled on IRT. And as usual, I mean, as is the case every day for years, everything is completely transparent and permanent record. And also, let me point something out that may be obvious or not. Everything that I'm watching here is captured on my video. The only way I get what I'm thinking at the moment into the recording and the stream is this this incessant voiceover all the time. But it's the only way I can do it. So when I review the stream, like yesterday, I go back and look at those two trades that they both got stopped out, signal trades. Yeah, I did, I was reading it right and did exactly what the system did, and boom, Bob's your uncle. There I was hammered. What am I thinking? Well, I'm thinking that in this kind of a crazy environment, continuation trades may not be the way to go. And they were both IBC. They are both. Oh, man, I hate it when I do that. There's the first one. There's the second one. And then this is Trump's not going to give anybody a tariff. That's what you need to, imagine that you were short or didn't have stops or targets in the market when this happened. Not a pretty picture. Or if you're on the wrong side of it, of course, it's a pretty great picture if you're on the right side. Anyway, so in another 7 or 8 minutes, we're going to have the initial balance statistic in place. And that will signal that we're off and running here. Now, this is the time for my usual, where did that go? I never remember what it is. My daily warning, I recommend strongly, do not trade in anticipation of a statistic. I know, people who trade discretionarily, that's all they do. So good for them. And if it works for you, if whatever you're doing works for you, do not stop under any circumstances. And be sure you understand that this stream is what I'm doing. It's my virtual journal. This is by no means intended to be my way or the highway. And if you've got a way that's working better and consistently profitable, by all means, please let me know. Anyhow, it's real simple for people are real likely when FOMO gets going and Monkey Boy is jumping around, you want to trade to the statistic. And, yeah, it makes sense. We're below both VWAPs. We're below the mid. We're below the POC. And here's the low. And boy, we're going down. Yeah, maybe. Right here, that wouldn't have worked so good. That was a stop. Once this is taken out and it's 9:30, it is a statistic. That's valid. Until then, it's not. In my system, if you have a system that trades to the statistic and it's, you've vetted it and it's statistically has an edge or an expectancy, again, don't quit. I'm just talking out loud here to myself, basically. And 4 minutes. No. 5 minutes to the bottom of the hour. Like I said, don't trade in the direction of the stat. So if you got short right down here, you're stopped out. Assuming you're using the 3-point, a risk neutral bracket like I am. And more stopped out. Yeah. So we had a taco trade, we had a taco moment yesterday. Same as, if you remember back to the Rose Garden and the tariff story, and then the taco, that's when the taco story first came into being. We had another one yesterday based on that big sell-off day before, I guess, which is at least somewhat reassuring that there are some guidelines or guardrails somewhere, because I think they're far and few between, but at least they exist. They do exist apparently, and that's a good thing. I'm constantly amazed at how this particular administration is just so sophomorically insulting to other people, world leaders, or the Fed, Chair Powell or somebody like that. It's like, it just surprises the hell out of me. I never saw such a thing. I'm not saying right or wrong. I'm saying it takes me back. I'm taken back by it. I realize it's all just spin, and that most of them probably don't even have much input in what their speech is about. They just are given it, so I guess they're just basically meat puppets. Maybe, I don't know. Well, now we've got a minute to go till the IB stats in place and see how well that worked out to trade toward that statistic based on all these VPOC migrations lower. I still can't figure out my head. I can't get around that one, boy. I'd love to try to vet that, Antonio, but I just can't figure. Peter K or whatever his name is, he claims he just takes every one of them, and maybe I should try that and back test it to see. But I'm sort of getting, pretty disenchanted about the back testing story here with the continual random distribution, the way it's playing out these last couple of weeks. I still believe it's the right thing to do, but then there's a point with, okay, how much can you hemorrhage before? I suppose that, people who move their stops and all that, if you've got an unlimited account, or if you're on some sort of prop thing that doesn't matter, you can keep moving your stop because eventually the market does turn around. But how long? There's 930, so are the statistics, and pretty quick you'll see the pullback and continuation zones materialize on either side of the IBs over here, as that pushes from my investor.com IRT. Maybe I said that on Bookmap. It pushes from IRT, and there they are. So I know it's absolutely 930, and I know that now the initial balance statistic is set. The IB low will no longer move down, nor will the high move up. It's a statistic now. And it wasn't a minute ago. And you'll see now that the levels have materialized over here. And I'll try to open this up a little if I can. Still got a 15 millisecond lag. I'd love to shut the damn thing off and start it over again, but I wouldn't want to short circuit everybody who's using the levels. And I can't start and stop it fast enough. I think I'll cut those fractals off. So here we are. You'll see what we're starting to develop here on a little different view. This is a big B. That is long liquidation, according to market profile isms. And they looked up here and didn't think much of that, and now they're putting in a lot of volume down here. Back in the previous RTH range, but they haven't dipped into value yet. So the gap rules, if we remember, are if the market closes the gap relatively early in the session, which it did, and if price is accepted in the previous RTH range, and more specifically, or better yet, in previous RTH value, there's a high probability that we will trade across that value area. This is market profile isms again. If it's accepted and or rejected back out of the range and the value, common sense, high probability, we'll trade in the direction of the gap. Not a surprise, but those are the gap rules as I learned them. The gap rule as I learned it, for the record. And here we are. Bing, bang, bong. That didn't work out so good. Look at how amazing. Every day now I say this. I know it's probably getting boring, but look at how strong the support is for my levels here. It's just amazing, huh? And up here, resistance, yes, previously, which of course is a complete freaking joke because these are just levels I pulled out of the air with rod to start back testing the pullback and the continuation zones. You know, it's the same fallacy as the Fibonacci stuff. That's no more a level than flight of the freaking moon. It's a level because I drew it on my chart. I can draw a line right here too. Is that a level? But it's amazing over the course of the last few, I don't know, I haven't kept track, but it's a bunch of previous days, almost without fail. One of these lines or more will just boom, 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 and go on and on and on. To a degree that it would be, if I were an internet guru, rearview mirror guy, or had was doing some sort of a video about how fantastic this system I developed was, you could point to it. Look at here. Look at how how there is, this line is support. It's funny. I think that's the whole premise behind, one of the aspects of Monkey Boy is some human tendencies to see patterns that don't exist and constantly strive for confirmational bias. Just like our FOMO and desire to be right and all those things that have been cooked into our DNA over the course of millennia here. I don't want to use the term evolution to offend anybody, but I think even the creationists believe that we have been evolving as a species, just as selective breeding or something for cattle or horses or dogs has happened with humans, depending on however you got started. I think everybody agrees about that. I don't know. Maybe not. Anyway, point is, I think that those things have been wired into our DNA. And one of the reasons I don't think I should say one of the reasons I believe it's ridiculous or folly to try to say I'm going to eliminate FOMO from my. No, you're not. You're not going to eliminate FOMO from anything, or your desire to be right, or that you get mad and feel revengeful when you get stopped out and want to get back on that trade. Those are all monkey boy baked in there. What I think my approach and what I think the way to do that is, and again, this is just me talking to me. I try to be constantly vigilant and aware of that base level of me. And when I feel that adrenaline zooming through there, or monkey boy starts swinging around here in the room, I put him out in the backyard, and just don't act on it. That's the way I think you need to approach that. I feel sorry for the people that are going to eliminate it, because I'm pretty sure that's not going to happen. Now we're calling out mid-flip, and, everybody had a bar trade and all these things. And those are great, and they made money, and that's really wonderful. But I don't see, for example, they're calling this a bar trade, and several guys in Statistic took nice profits on it. So you had the V reversal, you came up. Wait a minute, am I on the right bar? Yep. A bar trade means breakout and retest. So you broke out, you break out, retest, break out, retest. And I guess if you line that up with, no, that's not a VPOC migration, because this is full session, not RTH. And then they got short. Good for them, and that's fantastic. But what I can't do, and I wish somebody would tell me, okay, which way are you going to go here? Are you going to go in the direction of context? It broke out up here, came down, broke out down here, and came up, broke out up here, and came back. How do you pick which way to go? Similarly, I can't, and I've talked to Antonio about it. What criteria could I use to validate, backtest, or, vet the VPOC migration trade? Nobody can miss the yellow brick road moving up and down, but it's those qualifying rules that validate the entry that I can't figure out. Same way with a bar trade. And remember that with this bar trade, you're right there. So we've traded up. We did tag out the overnight volume point of control in that, but how do you determine that that's going to break low? This one? Because in many other trades that people use, setups, this is a V reversal. So this deep V retrace would be a trade to the upside. And I can't figure, it's confusing to me. That's probably pretty obvious. So let's see what happens here. Well, I think I've gone over this whole story well enough. Now I've changed the basic setup, which is done here. This is the setup as I have it now in Bookmap also. So there's the stop at 12 ticks. There's the T1 at 12 ticks. There's T2 at 48 ticks. The break-even trigger is at 12 ticks. So when we reach T1, the system and Bookmap will bring the stop to entry. And that's based on backtesting extensively. That has proven to be the best, most successful and profitable backtest scenario anyway. Backtesting for 21 days, for 14 days in January, to 498 days, historical days. I don't know what else to do. That backtest is, in case you think I'm lying, which I've been known to do. Now this is filtered for that specific scenario. So here is December. The micro, 60-second or 1 minute periodicity. Stop 12 ticks, T1 12 ticks, T2 48 ticks. 2 lots. Trail trigger at 12 ticks to break even, or to entry, I'm sorry. This is December. This is 495 days in the rearview mirror. And I did this on the stream yesterday afternoon for the 14 days of January so far. And here's the values. Gross profit, it is by far and away the highest gross of any of the 100 plus back tests I've done with all different kinds of configurations. Trail to 12, 24, 24, here's 36, 36, 24, 48, 24, 48, etc., right? This configuration to break even is by far the most profitable. And win rate, loss rate, expectancy. The highest expectancy is 36, 36, 12. The difference where these put me off is that it's got a 21 consecutive winners and 12 consecutive stops, whereas it's 38 to 37 consecutive winners and 9 consecutive stops on the 12, 12, 48. And this is from, I did this yesterday afternoon, and this is from the 14 days of January, 78, 33, 21, 17, 9, 1.4 R factor, 13 and 17. Oh, I'm sorry, 12 and 1. Now, wouldn't I have loved that? Just yesterday, I took 2 stops in a row, and the day before that, 3. So I don't know what to think. I don't know what to do now. Like one of the things I'm wondering about is the condition where I see the signal, have the signal, and then take the trade manually. I take it exactly the same, and I don't change anything. I mean, me changing the stops or moving a stop away or any of that crap is. I also don't wet my pants, you know what I mean? I'm an adult. So that's not even a question. But the only thing I can do with the stops, to be clear, is trail up for trade management. And I can never move T1. I never will move T1. And I can move T2 for trade management. If, for example, if I put a trade on here and T2 is over here, well, it would be common sense to bring it up closer to a statistical level. Or if it's, like 1 tick above here or 2, maybe it makes a little more sense to bring it 1 or 2 ticks for the sweeper down below. You know what I mean? Trade management only. Never move the stop away from entry. That's like... yeah, ever. So here we are. We're 45 or 15 minutes in. IB stat is hot. Nothing happening over here. Now it's getting a little dicey. Here's how my mind starts to question. We were directional at the open, and then we've built this B-shaped profile up. We have news potential at any moment. Typically, the initial balance trade IB continuation, which would be we trade up here, we take the stop, we trade into the continuation zone, back to the trigger, and keep going. typically that would be suggested by a directional day. And the reverse, or the failure is IBF, or IB failure is suggested by rotational day. So what do we got going on so far? And looking kind of rotational, isn't it? If I get an IB, what happened yesterday and the day before, both of those trades were IB continuation signals, which I took, and both of which failed because it rotated back in. I don't know what to do. That's where I'm going with this idea, this whole diatribe here of context filtering somehow. Yeah, it was pretty clearly a lower highs and lower lows, and boy, we're going to the moon. We're going to the other side of the dark side of the moon. And now look at us. I don't know. Get the job for another green tea. And again, this is not my way or the highway. This is what I'm doing now. So, and I do it with full transparency and accountability. That's why the stream is so long. When I first started, I thought, well, I'll do a couple hours, and there we go. But my commitment is I would take no trades off the stream. So I'd go do whatever and come back in the office here, and then I'd see a trade set up, and I couldn't get the stream fired up fast enough to get it captured, which was pretty stupid. So I just thought, well, that's obvious. I'll just, adopt the schedule that I have now, which is pre-market at 8 and then market opened at 8:30, and the stream lasts until 1500. So any trade taken is on the stream, and I don't trade out of those hours. So that's not a problem or an issue. And one of an example of whatever works for you is what you need to do. There's a fella in TLab, actually, a guy named Greeny, who's a prolific poster in there now, who announced this morning early that he had passed his an evaluation of 150K, it looked like. And I was just curious what instrument he was trading, because I noticed on his posting that it was 192 trades so far in January. Now I'm assuming that the evaluation started in January, seems like, but and he made the $3,100 or something like that. Well, did that include? If you just do the math, that's $10 a trade. And that's why I was curious what instrument he was trading. And also, did that include commission? If it was the ES and he took that many trades, the net profit with commissions would have been less than $100. But apparently it's the micro. So, and I'm not saying anything wrong with what he's doing or that's not great. And again, congratulations, but just different ways you can approach these markets. And different philosophies. He obviously doesn't share the philosophy of reducing the exposure of his account to market risk in this environment, which I talk about a lot because I think that's important. 192 trades in 14 days. That's a lot. And it worked out good for him. So that's great. That's really great. Seems like a good guy. Or I guess it's a guy. Well, let's see now. VPOC migration down, VPOC migration back up. This is turning into a flipping rotational day. This may be one of those situations where I need to eat and sleep. I will continue to take my trades as I've committed to do manually. When a trade signals over here, I take it manually over here with my live funded AMP account funded by me. But I'm getting kind of tired of the bird on the wire just sitting there being picked off, when I think, well, I'm not so sure that this directional move, like IB continuation, for example, is the way to go. But because the system has taken that signal, that's my commitment. And I don't know how to approach that either. So just thinking out loud here. Shaking the bush here, boss. And here we go with more of that VPOC migration. Mystery to me. So there, if you were Peter or anybody, you would have taken along right here. I asked him specifically in Static what his rules were, and he said he takes it on migration. And he had some stats that he posted that were encouraging. But I can't replicate that with my data. So, you know. Hey, Panda. Oh. What are you doing? Huh? Can you say good morning? Hmm? What is that? Does that smell like me? Huh? You say good morning to Antonio? No? Mom's the word? You're mad now because you're gonna be silent? All right. Well, we got a big nothing burger going on here. That's good. Remember, there's 3 positions in trading. If you're trading it as a business: long, short, and flat. The majority of the time, I think even Tom agrees. Rod, I know, does. The majority of the time, you're flat. You're anticipating the trade and waiting for it to set up, as opposed to 40, 50 trades a day. That first VPOC migration backup was the full session. as opposed to the RTH session now. Come on. There you go. The full session VPOC is a more muted yellow. And the RTH is a brighter one. I should probably do something about that. I try to keep the coloring consistent, the color scheme consistent on both IRT and bookmap, so that, you know, the migrating VPOC on IRT is the yellow, just like it is in bookmap, and don't have that right. And the previous is red, or the consistent is red. IBs are green, and, you know, VWAP and mid and all that stuff are the same. Man, don't ask me why. I just anal, I guess. Current day, yesterday, day before. And now they're building it out with they're bringing the point back into the center again. So they're actually going to bring this thing back to a rotational day, it looks like. I wonder what they're waiting for. Maybe, I don't think there's any Trumpage going on at Davos today. I forget which way to twirl the mouse. With IRT, if you hold down the shift or control and move your mouse, you can expand, contract, move up, move down. What I'm doing over, I wasn't even on the right screen. You know, that I was doing over here to be a little easier to see. By the way, I stream these in 1440p high def, so if it's not clear on your end, click the gear button there on YouTube and select that quality. Yeah, so welcome to the stream, my virtual trading journal. I trade live, and I trade complete transparency and accountability. And I definitely don't recommend, this is not trade advice or anything else. And one thing I point out early before the stream starts, actually, I always test this out. There is a built-in delay with YouTube. So if I say, well, okay, here's the signal, I'm in the trade now, or I've gone along, or whatever else it is, it could be 20 or 30 seconds before, you know, it shows up in the stream. So follow along on your own setup and make your own decisions. Is the best way I know to say that. I don't believe this, teach a man to fish and he'll eat for his life, and give a man a fish and he eats for a day. Yeah, I understand the concept there, but if the guy starves to death, that's, doesn't do him much good. In my opinion, that's the excuse most people use for not being transparent or accountable, frankly. That's why I am. And besides, this is my journal, so who would I be trying to BS? Me? You know me. Oh, what is that? No, I didn't want to do that very bad. Come on. Sorry about that. I bumped this thing and it zoomed around over here. And of course, let me mention again what this is all about. This is Bookmap. I assume you know that. The dome or the price ladder or the order book, or pick your name. The prices. Resting liquidity, resting orders. My micro composite column in Bookmap, where I transpose manually the values from this micro composite chart, more specifically the micro composite VPOC and highs and lows and things like that, all-time highs. I enter those in this column. The high and low volume nodes, which push from that same micro composite chart, this final volume profile. You see the red and green guys down there? They push automatically to Bookmap, as do the session prices. So this is the full session volume profile, which started plotting last night at 1700, and this is the RTH volume profile, which resets at 8:30 this morning. The statistics column, which I've gone over ad nauseum, and the session prices, and the heat map. I guess everybody knows these gradations here are just graphical representations of resting liquidity. 312 contracts living there at the 55 handle. One thing that's pretty handy about Bookmap is that liquidity came into the book at 926 and it's been sitting there. Kind of handy. Some guys, and I do have it already built, you can have these session prices reflected in the the level lines here, this indicator. But what I'm using this for is my pullback and continuation zones and the trigger zone, because when it comes time to enter a trade, I don't do very well looking at 2 or 3 charts at the same time. And I get so tickled at these guys that post a screen, a picture of their trading station or something. They got 37 monitors and half of them behind them. No, I can barely keep track of these 2 big monitors I have in front of me here. I don't have eyes in the back of my head, so I don't understand how they do that. But, I have in front of me, here's a 4-rack monitor, a 4-monitor rack. The 2 main trading screens are these 2, which are 32-inch 4Ks, and that takes a lot of my time, switching my head around and keeping track of all of that. The upper 2 monitors have the stream going and static over there because I'm talking to Rod off and on. And then the standing desk to my left has the OBS and stuff, and around the corner is my old workstation with the boring stuff, Outlook and all that on it. So the 2 upper monitors here are also run by a different computer. So my trading computer runs the two screens and the OBS, obviously, and the stream. And here we are. all dressed up, no place to go. But I get a real kick out of those guys with 37 different monitors and stuff going on. Ooh, okay. It looks nice, that's for sure. I don't know. I don't think I have a screenshot, and I don't want to bother looking for it. But I'll never forget seeing a YouTube thing of Patrick Weirland or Wireland or whatever he pronounces his name years ago when he was just getting going as a YouTube guru-y guy. He went and interviewed some old trader guy in New York that's got like 95 monitors or some stupid shit. They cover all 3 walls. And the guy stands in the middle, and he had 2 women behind him that were supposedly tracking the orders and doing this and that and the other thing. And when it came down to it, when you watched what he was looking at and talking about, he was only really looking at a couple of monitors. But it was really funny. He was standing in the middle of this room, and literally 3 walls, and it wasn't a little room, 3 walls were covered with racks with monitors, literally. Like, okay. I don't get it. I mean, I think it's impossible to do that. They say that psychologically humans, if you get your decision tree much more complicated than 5 or 6 items, your brain just defaults, falls over and defaults to the most obvious, whether it's the accurate or not. That's they say one of the problems a lot of people have with, these big complicated decision trees for trading, for example, is that it looks good when you're doing it, but to actually do that in the heat of the moment, trading wise, it doesn't work. And from my point of view, this system has 3 rules. So, or 4, I guess. 3 rules and a filter. Whoa, I don't want to do that. And if if you fly at all or pilot or whatever, you very well know that the checklist systems are broken down into, pre-landing, pre-takeoff, landing, pre-landing, all that kind of stuff. And not a million items, and there's 2 of you typically. If you're fortunate enough to be flying big enough iron to have a co-pilot. And everybody knows you don't ever commit your checklist to memory because it'll be that one thing you forget that might end up bad, might have a bad outcome. Well, let's see now. Got a couple people making big money everywhere. All these, whatever they are called, these icons or whatever, like the number 1, the stuff in the stream, that purple crown thing and the number. I can't shut that off. I don't know how to do that. OXP, whatever that means. Maybe you can now. Originally, you couldn't shut it off. I think it just who was logged on first would like that means something. But in these chat rooms and Discord stuff, I wish you could put a thing like that someone would select whether they're trading live or not. Because there's a lot of people that throw out a lot of advice, and then you find out that it's, they're blowing up 15 prop accounts in a month or something. And I think that's really dangerous. One of the reasons why I've, kind of selected who I thought made sense in TLab, for example, and I don't follow that at all through the day. I'm in there in the morning to say hi and make my screen snaps, and then there's a lot of free advice in there that may not be the most. And I'm not saying that it's ill intended. I'm sure everybody. Well, maybe there's some asshole that thinks he's going to get in there and screw somebody up, but I don't think that's the case. I think generally people post what they think could help or whatever else. I'd like to think so anyway. But, if some of the newer traders take some of those ideas, they might find themselves in a world of hurt. And similarly with, that didn't sound right. Similarly with, like psychology and trader psychology and those things. I was talking earlier about Monkey Boy and, the hardwiring we have, FOMO and those kind of things. Recognize it, don't act on it, and above all, be an adult, I think, is a huge step in the right direction. And you got to remember that there's a lot of conversation about trader psychology, for sure, and it is a serious thing. But a lot of the people that are leading those discussions and keeping that dialogue alive are making money writing books about trader psychology. So, not that they have ill, alternative ulterior motives there, but I'm pretty sure they're, if everybody thought trader psychology was a real big bugaboo and a huge thing to overcome, I guess they wouldn't sell so many books. Just throwing that out there. And I don't think anybody that's an adult should have a problem recognizing, oh, I overtrade. I better not do that. Maybe I just don't get it. It's very possible. But that's what I think. Well, nothing burger so far, but they have definitely brought this back to a rotational day, which doesn't make me all warm and fuzzy. Or doesn't give me a warm and fuzzy feeling, shall we say. Look at the profile now. There's the migrating VPOC. There's the as it stands and how it is, value area high, value area low. Now, you could make the case that there's very little excess on either the high or the low. So it's kind of a poor low and a poor high market profile terms. If you look over here, it's seems a little bit more defined. Maybe perhaps could use a little more extension to the downside. Just something I've noticed, if you see a flat profile, typically they come back down there. It's just, think about it. If this is an auction, does an auction just stop? Maybe if the, auctioneer has to go to the bathroom or something, I'll be right back. And then boom, and they come right back and it continues on. But, it doesn't just usually quit in the middle of, without tapering off, shall we say. In a minute here. Where's the gap low on the 17th? Okay, and gap low way below us. This is accurate. We've not closed the gap to the downside yet. Or have we? I guess you could say we have, because here's what we're talking about. Here's what I'm talking about. 17th. Well, there's the 17th. That's gap low. Be right there. Okay, so here was the high. This is that holiday Martin Luther King Day, Monday. In my world, the low of this bar is the gap high, and the high and the open of this bar is the gap low. So we've just now tagged this out. And I guess you could say yeah, because here's the open. We've taken out that gap as far as I am concerned. Let's see if I have the 17th even down there, or the 16th down there. Gap low 20th. Naked volume point of control. I have to give that one a thought. I hate holidays. Gets the data. I don't. I scrub the data, so that's not involved in the holiday. Those half days and stuff. But I have to think that one through. I'm going to think that that's correct. As far as I'm concerned, that gap's been dealt with. And what are we doing now? Rotational day, huh? That tanker turned around and they're filling it in. So if you are all... I wanted to point out something Hopefully I can. That is, in my opinion, deceiving about candlesticks that sometimes people aren't aware of. Notice this day right here. See that? Where would you suppose the naked volume point of control is for this day? Where was the point of control when this day closed? Would you guess? It's the I know maybe I'm the only one that thinks this way, but okay, see that right there, that candlestick. Now watch this when I turn on the naked volume points of control. Do you see that? Today, we took out the naked volume point of control for this day, which was right at the high. That means the high of this day, which was this 21st, was the highest traded volume price for the day, for the session. To me, that's deceiving. And I'm not saying anything wrong. It's just, I look at these candles and I think, well, that POC's got to be down here somewhere. That's absolute crap. The wick of the candle's got nothing to do with volume. The open, well, in this case, the open, the close. It's the open, high, low, close, period. Nothing to do with volume. And surprising to me when I looked at it, and because I double-checked myself, did I have that correctly? The POC, which is, as we know, the price at which the most contracts traded in the entire session, was right at the high. I think, in my opinion, there's actually some platforms that have volume profiles where the width of the wick, indicates the volume, but it doesn't show you where the volume is of the candle. Now, I think a couple of, maybe even IRT, will plot a volume profile on each candle, which would clear that up. And I prefer bars. When you see that I'm over here, it's bars, because there's no deception in my mind. There's the open, there's the close, boom. Bob's your uncle. There it is. Open, high, low, close, period. But that surprised me, and I wanted to point that out. And maybe that didn't mean anything to anybody but me, but I thought what is that? Perception, eh? Monkey Boy's at it again. So we're scooching our way back to the top here. And there's the open. Right back to the open. What does that mean? That means we have just clobbered all of these retail guys and created a giant bowl of retail soup. Just ground them up like soup. What goes up what goes down goes up, up to go down, all that stuff. It's very true. Absolutely. Realities about the market that you should never forget. And one of the things that some people maintain or seem to believe in is that the object of this auction is the value of the S&P. I don't believe that at all. Long term, higher time frame, multi-day, okay. let me ask you this question, or ask yourself this question. If you got short or you put on a trade anywhere today, did you give one moment's thought about the value of the S&Ps? Or did you want to know that you were aligned and hopefully get a profit on your short little trade? I certainly don't think about it. I don't think anybody else does. That's trading in our time frame. I don't really think that has any bearing on the fact. Now, value, what does that mean? Well, that's what, the typical idea, that's the price at which the value, everybody agrees that the value of the S&P. Okay. I think that might be a misnomer. In my world, I'm just talking out loud. Remember, the only way I get what I'm thinking into the stream is talking here. And maybe I'm the oddball out, which is entirely possible. Maybe every one of you within my earshot is real concerned about the price of the S&P and where's it going to go, and is this the value of all those 500 stocks and all that stuff. I don't think that I'm just saying I don't believe that for a minute. I know when I put on a short up here at a signal, I'm hopeful and anticipating that it's going to go down or vice versa, and that I'm going to make money on that trade. That's called speculation. And that's why so much of the time we see this thing. There's the open. There's the open. Oops. And you also need to remember that with futures, it's a zero-sum environment, game, business. There is never, ever, ever more sellers than buyers. It's an impossibility. We trade contracts which require a buyer and a seller. Sure, there can be a big imbalance of resting liquidity, resting orders in the book, absolutely. But in trades, absolutely not. Impossible. Can there be more buyers than sellers? By definition. How does the market go down? Aggressive sellers come across the inside market and hit the bid. It's aggression. How does the market go up? Vice versa. Aggressive buyers come across the market and lift the ask. But never at any time, trades, is there more buyers than sellers? That's not how it works. It's a zero-sum game. The next step in that thinking is selling. Every one of those contracts that was sold, somebody's on the other side buying them. They get down here and let's see, somebody with a lot of money, some group with a lot of money, has a whole bunch of inventory because they've been buying all these contracts. How do they make money? The market goes down to go up and goes up to go down. Tom, anybody, That's an insight that I think is important. And I could be just a conspiracy, theorist about who's doing that. But in my point of view, it makes only common sense. I don't have enough. Do you have enough money to be buying all this selling down for 40 handles? Thousands of contracts? I don't. But how would you make money? And those guys who have that money don't typically lose money. They don't typically lose trades because they've got the horsepower to hold through this. When they get everybody down here and everybody's short, what do? They just run it up and start hitting shorts and start hitting stops. Well, let's see. 53, 21, 128, 170, 683, 100, stops all the way up you go. think that's it. I really do believe that's big. Now, I know that doesn't sound cool, and I didn't make any comments about how I was given an algorithm for the trading machine by God, or but you get the point. Oh boy, it's crazy, and it's stuff that you hear on about trading. Whew. I never will forget. That's actually true. The ICT, is it ICT? No, or ITC guy. I don't know his name. Michael, maybe something. The guy that did came up with the fair value gaps and that kind of stuff. I actually heard a live podcast with him and another fella, and he said I was given I was given the code for the algorithm that actually controls all the markets by Jesus Christ. He said that right straight out of his mouth. You can Google it on YouTube, and there it is. I forget the podcaster's name, but yeah, I was like, what? Yeah, absolutely. So yeah, wow. And that guy's got a huge following. And most of the people, if you say anything about him, they get real aggressive and defensive. And I hope they're all making money. He actually, there's another one he actually, podcast where he's talking about the fact that he didn't make any money trading, and has gone bust in all the trading competitions that he's entered. This world thing, which is also a Googleable fact. But he made millions of dollars doing mentorship that he started out with. I think it was Twitter or Instagram or somewhere like that. He made millions doing that. So yeah, good for him. He figured out a way to do that. Whether he I don't think he genuinely set about the world trying to not care whether traders succeed or not. I don't think there was any malicious intent there, but he figured out a way to make millions of dollars. Couldn't trade. So, it's like the old adage, those who can do and those who can't teach. So maybe that's part of it. I don't know. Boy, I wish I could do that and make millions of dollars. I'd come up with some fancy teaching stuff if that was the case. Right now, I'm going to go see what my sweet partner here has cooked up for snacks. Well, they continue to, well, come on, man. They continue to fuss around here, sneaking up towards that IB high. Remember, 97.6% probability that one of those values will be taken out. And imagine all those boys and girls that were just absolutely positive it was going to be the IB low. And here we are, pushing the top. And I'm not insinuating that it's going to be the IB high either. I'm going to wait and watch until one or the other are taken out. Well, let's see. What the hell? What is somebody going to come up with now? That's the that's the big question, isn't it? What randomness is going to happen? Let's see. It's 1700 in London. I'm not sure the time zone to Davos to Switzerland, but it's got to be at least an hour. Not that that matters much, but sooner they get drunk, fed, or go to bed, the better I'm gonna like it. And I'm not sure the schedule. I don't know if I know it's on the docket for all day, but I don't know whether they meet through tomorrow and then they all blow home on the weekend, or what they do, to be honest with you. But I will just take it as they come. Take it as it comes. Remember the important, excuse me. Remember the importance of trade what you see, not what you think. Really big one. That's also one of the advantages I should point out about I hope these are spelled right. Anyway, one of the advantages of trading vetted trades only. Nothing's a surprise. It's not hurry, scurry, and blurry, and oh Christ, I got to get on this, blah, blah, blah. You anticipate. In this case, my case right now is perfect. There's 3 rules. The first is, or criteria, the first is the IB statistic. If that's achieved, okay. Now are we going to get a B continuation, a B pullback? Are we going to get neither? Whichever happens, okay. Are we going to get the trigger or are we not? It's that simple. If you do, you're in the trade. You know, if you don't, you're not. It's one of those things that I believe can really add or add to the calming state of mind that you need to be in to trade right, as opposed to hurry, scurry, and blurry, you know, when the adrenaline firing out your ears. And just, again, I'm talking to myself, and it's my my virtual journal talking to myself. I've noticed one thing for sure. Bookmap leads IRT as far as I've got IRT happening over here. Because I watch this candle develop, or that bar, and we were already up here before that happened. Just an observation. Well, I hate something that's happening right here, right now. I don't hate anything. I shouldn't say that. I definitely don't like when the market puts in a ledge. Typically, I get hammered. But in reality, my guess would be that we're going to break that ledge and then get a pump. I don't like it when I'm in a trade and we're approaching a ledge, for example. See what I mean about the ledge? That disappointed a whole lot of people. Or they're all excited, getting short. I think Harry was trying to get short. Kind of a cryptic post there. I don't understand. Now here we go with the full session VPOC migration north again. No, that's the. Wait a minute. Nobody move. So now the IRT is now ahead of bookmap. I give up. Now let's see what we're going to get. So what do we have here? Pretty firm level of support, it would look like, at this low volume area and the previous, the overnight volume point of control for whatever reason. Well, look how those PB levels are holding. Really, really strong resistance there. And support on this side. So funny. It is amazing. I mean, I understand why people fall into that mindset that they think they're seeing some magical thing or, some support or resistance. Those lines are just, I've decided, let me draw a line here. Watch the ledge. A lot of buyers are not getting paid, huh? We go with another VPOC migration. Oh boy, everybody's excited. What, Panda? Hey, Panda. Oh yeah, here we go. Maybe. And what a surprise. Look where we are, back at the open. Yeah. And here we are, coming into the noon hour again. Son of a gun. Bookmap continues to have these discrepancy in the volume calculations here. And I don't know why that would be. Well, they brought it from a B-shaped profile to, well, first of all, it was a directional, then a B-shape. Now we're back directional and leaning on P, which would be short covering. I'm confused. Confused. And that's a pretty easy thing to do. Look at that. First it was like this, then it was like this, and now we built it up here. And this is still just staying on the dozy there. I'm wondering what the hell is even going on. Well, that's because we're right on open. That's exactly what's going on. So yeah, not a surprise. Yeah, crazy, huh? Wow. We were at a 249% volume yesterday. We were at about $1.30 this morning on the open, and now we've dropped way back to 86%. And this is over the last 20 days, 20 sessions. That's pretty crazy. Oh, this resistance is really getting strong up here. They keep testing it. They're liable to break through it. This critical price level there. I swear to God, it is amazing how often that works. I guess if you, at some point, I'll just open up another one and draw a line somewhere and see how often that works. I'm assuming it's because of the proximity around the IB high. Makes sense, right? But it is funny. Look at that. And the same with the top. Now they're liable to sneak up here and poke through the IB, which will bring a dilemma for me, because if I get a signal up here, I don't know what I would take it, as much as I hate to say that, but I've committed to that. The problem is, how would I feel about it? And next question is, let's do a quick round the mulberry bush, okay? Okay. Looks okay. And there we go, almost. Pretty close, huh? I would say they're going to get it on the... There we go. So now the initial balance statistic has been achieved officially by the base requirement, which is that price is revisited, the higher the low. Now, did I forget to know? Huh. I'm not sure just what's going on here. Should be having a signal up here. Oh no, it's not. I take it all back. Remember when I said my rules are sometimes a little more complicated, and there it is. For this bar to be a signal bar, which would generate the first rule, the preceding bar needs to have an open lower than the close. So now I'm sitting on my hands. Oh, and wouldn't that have been a fine maneuver there? So they've added some taper to the top. Got a consolidation up here. Do not have a signal, and that's why there's no trade. I noticed listening to the stream yesterday, I clear my voice a lot, my throat a lot, and I don't know why. Maybe it's the dryness here, I don't know. Sorry about that anyway, if it's annoying. As I do it. I suppose it's a habit, and like a nervous habit, I guess. Now, for this to become a signal for me, price would have to come down through the initial balance. And then, as I said, the signal bar, this is fine. Opens below the close, open is below the IB, close above the IB. The problem is this bar. Had this bar been the previous to signal, it would have been an A. We would not have a B. We would not, and this would not be a trigger. But there's no signal here because this bar closed below the open. My thinking when I coded this is that I want price to be moving up to the level. I don't want it to be falling back and jumping up, whipsawing. And these things are all just arbitrary. It's what you think as you code this up, and then you can start doing what if optimizations. But the only way to do that systematically and methodically that I know, in my world anyway, you run a back test as is. Pick the days, pick the this, pick the everything. Then you make that one change. The one change. Okay, I don't care if the previous bar is closes above the open. And then you run the back test. Is it an improvement? Is it not? If it is, you can consider keeping that change. That's the only way I know how to do this. And I'm certainly not probably not the best example, but at least I have a process, I stick with it, and I am swore that's what I'm doing now. I'm waiting for one of you guys to throw something in the chat about with this great strategy that works that I can rely on, and then I can forget all these countless hours of back testing and just go about, making a quiet living. So come on, get with it. Get those strategies in there. This is the reason why I feel focused on the IRT often. I've even got, you can't tell where the open and where the close is, right? Because these are not time-based. So, I've even gone so far here as to, if I can get this to work, I don't know why it's not working, to add 1 minute candlesticks to Bookmap so that I can see where the open and the close is of the candlestick. And then you got to wind this out to a minute, of course, or close to there, so that you can actually see what's going on. This candle is being formed on this data. This candle was formed on this data. So that didn't work out very well for me, to be honest with you. I felt just kind of cluttered up and goofy and trying to see something that maybe wasn't there. I think I'm better off. First, I don't like candlesticks, but Bookmap doesn't have any facility for just bars. So I revert to watching the Investor RT. Once again, no signal. So okay. Ooh, now. What's on over here? I'm busy. Posting some stuff for the session volumes here, and didn't matter, was coming up with different numbers. I had originally posted this one, and then he said, well, no, his is way over 110%. And I thought maybe it was the session, because this is full session. And I put it to RTH session. It's actually worse. It's about 75%. Here we go. 676. So, yeah, I don't know. As what I said to him was, go with what you trust. That's what matters. It's you. You are an individual trader, so stick with it. As will I. Well, this is as boring as watching paint dry here, I tell you. But one of the things you learn from doing this that is, I guess, good practice is patience and, stalking the trade. I'm waiting for a signal, and then I'll wait for the second signal, and then if I get a trigger, I'll enter the trade. I will not do anything else. Well, look how we grew up here now. Been a doji all morning, and now they're going to do something, maybe. Out of curiosity, I wonder if that does matter. I wonder if the instrument does matter. No. Still 90%. That's pretty weird. Let me get back to where I belong before I'm all goofed up here. There we go. I have no idea. He's been trying to switch to Sierra Chart. Last time I remember about Sierra Chart, when I tried it, I have a subscription to it, but it was, you had to use Denali data. So, who the hell knows? Who the hell knows? And frankly, doesn't matter much. Well, what in the hell are we doing now? Nothing. So I'm sticking to the signals, sticking to my rules and my vetted setup. And that's what I will do. Well, this is bordering on suckage here. I'm at the no signal, no trade, and I'm at, midday. I like to take a break, rest the eyes, get a couple of mile walk in an hour. I walk about 3 miles an hour, like so. A little exercise is supposed to be extreme cold moving in here tomorrow, and the next day it was below. Well, around -7C, which is about 919 or something. And Sunday, they say, so I'm worried about the house and the water and the outside animals. And, and this ain't helping. Just looking at this in review here for nothing, because I got nothing better to do. Had this been the first signal, in other words, had this previous to the signal bar opened below the close, this would be the first signal. The second, or the B signal, would be right there, and the trigger would be right here, and it would have been long. 64 to 68 would have been risk neutral, T1, you know. T1 target, and then helmet on and feet up, and away you go. They break it out the top and take it up, you feel like a rock star. As it sits, I am just sitting here watching. And that's what you do. Now, this is where FOMO can, if you don't recognize that, you know, fear of missing out, chasing, revenge trading, all that kind of stuff. And more importantly, or worse in my opinion, is, well, I'll just tweak this, I'll just disregard this rule, this part of the rule, this part of the signal. That's then you might as well take all the hours of putting this code together and countless hours and hundreds of back tests, throw them in the garbage, because you just eliminated, or, you know, wasted everything that was accomplished here by discretionarily ignoring it. And that's not just my opinion, that's, you know, from a point of view of statistics, that's a known, definite. Well, something happened right there. That's got to be a Davos moment or a news moment of some variety. 12 o'clock, straight out. It could be a bond auction or something too. Hold on. Oops, I don't want to do that. Tips. Treasury, something or other, forget what it stands for. U.S. tips to cover. That we're all at 12 o'clock. Could also be this Musk story over here. That guy. As sure as I know the minute I step away, this thing will do something. But boy, it's doing a whole lot of nothing right now, except everybody that's picking the top is or looking for a breakout is getting hammered one way or the other. You muster an IB stat. The problem I've got now is I don't have any confidence in a long here. And that's probably the wrong attitude. But it's, it's my money and my account, so I guess I gotta do what I gotta do. This is wrong. I think. Now this would be coming into a B signal and then the trigger for a short, which would essentially be, well, I don't know, it used to be a counter trend. I don't know what it is now. Ooh, yeah, these are the VPOCs right here. That's a real bad idea. That's a real decision I need to make here. I'm going to defer to the system because I question this A signal, and it could be the signal marker itself, which is a little different code. So I'm going to stand by and see what the system does. If it takes a trade, I'll follow suit. If not, I'll be forever wondering why, and I don't know why. I've got kind of a mixed bunch of signals here. This is the RTH VPOC over here in Bookmap, not so in IRT. Oh, it's a wicked world. It's a wicked world. Wicked web we weave when first we practice to deceive. Now that ought to be a B if the A was valid. And there it is. And oh, we did just migrate the POC up. Do you see that? So would I be interested in taking a short into the POC? The answer to that question is no, because of the range requirement. The POC is by definition, remember, the price at which the most contracts have traded. And if we get to this trigger, where are we? We're 62.75-ish, 62-ish, right? And this is 60, so that's only 2 points. If you get spot in it to the POC, so that's a bad idea. That's the range requirement. I need to have an unobstructed 3-point or unobstructed range to the T1, which is 3 points, 12 ticks. And B didn't fix anyway, so I think we're okay here. Need to have a close below the open and close below the open and within the zone. If it's working right. And one of the things that I find a little puzzling, there we go. Yeah, we've got a B. But it's not showing up over here either. That's just annoying. These signals are supposed to fire when we have a V pound and a 3 V. In this case, when this is yes and this is no. Or not exactly, but you know, it's the idea. That's what those V pound variables are for. They're only for this series of flags and trying to control them, so it made sense. And I'm not going to diddle in the middle here, so that's a pretty good thing. It is just gone short. See the signal right there? And the trigger. No, I'm not going to do that. I'm not going to short into the POC. And that is, yes, it's a discretionary decision, and there you go. Now that's a rule that I can easily code up. That it is, you know, I could have gotten a short at 4. That would have given us the 3-point range. But I don't think that that's a good idea in context, so that would be the second one. But the range requirement would be easy to code. Why that B didn't stay out there, I don't know. This should have been the B. That's why this is here. That represents the B. A, B, trigger. Entry. Simple. I would fully expect this to fail because of the proximity with the POC. So that's one of the oldest, market profile isms that there ever was. I think don't diddle in the middle. And it might drop through and just, rip down to the bottom. Who the hell knows? But it's going to do that without me. That's unfortunate, but true. I see a couple of things I've got to figure out in the code, and that's the double trigger, which should not be the case. It's got to do with the inter-bar signal over here, and the B, which would also be the inter-bar. I try to do that stuff on the weekends. By the end of the day, my eyes are tired. I've been standing here for about 5.5 hours now. So it's yeah, it is what it is. As expected, that's a stop. And that's a miss. And here we are. Wouldn't get near that with a 6-foot post. And it's going to be a while before they're able to get the VPOC to migrate away from this far enough to have it be an interesting trade as far as I'm concerned. It's the range requirement is just not there. And that's when I got to code up. That's a real interesting point, and that's what I'll do. My advice is sit on your hands. That's what I'm doing. Well, what kind of trouble have they gotten up to now? They're still sitting on a possible long over here. And yeah, putting some eye medicine in there a while ago and listening to some Davos speeches. That was pretty interesting. This day is not going to have any opportunity for me, that's for sure. Today is still have a pretty flat top up here, which would indicate to me that we are it's entirely possible we get a breakout to the top side for a bit of some excess, just what I was talking about earlier. Think about this. It's really funny how this day has developed, isn't it? We started out directional, then we built lower, and now they've switched it to the upper, which is basically short covering. And notice the VWAP, the VPOC is shifting up, and we're right up here at the highs. What I was talking about earlier with no excess at the top, it looks like an unfinished auction, right? So I would not be surprised at all, and I would anticipate that we're going to have a move to the top upside. And of course, the minute I say that, they'll take out the low. Trade what you see, not what you think. Guess you probably heard that one before. And that's why you don't trade what you think. That's why you trade what you see. So much for the excess on the top at this point, anyway. Now, what's going to happen is they're going to get into the power hour 30 zone, and then I'm out of the game completely. See what I mean about the no excess at the top? One tick, right? One TPO up there. Over here, same story. Before this day's over, in my opinion, or at least the next couple, well, I guess tomorrow's Friday, huh? This will be repaired or corrected or whatever you want to call it. I wouldn't expect to see it sit like this. It just doesn't make any sense. But nobody said the market had to make sense. Boy, did this fall off a cliff. Look at there. Down to 1.75. Wow, 2 points per 1 minute ATR and 86%. This is with my data. This is DTNIQ feed and Rhythmic. Rhythmic is the live stuff, and DTNIQ feed is the backfill. And boy, oh boy, here they go. There we have it. The entire session. And guess where we are right here? The open. Well, that would have been just a breathtaking trade if I'd have gotten the trigger, wouldn't it? Right there. There's the A, B, and all we needed was a trigger, burp, burp, and then, that's the age-old hindsight. Very clear hindsight. Oops, I'm not even looking at the right thing. Here's what I'm talking about. A, B. What I needed here was a trigger. One of these to come up to the trigger zone, and then Bob's your uncle. Down you go. Trigger looks like. Come on. One of these guys here, a little down arrow. Which happens when this gets to the trigger area, which is the trigger zone. Yeah, it is what it is. And now it's pushing into the world famous power hour, and I have end of day rules, trade rules in the system, and they are right here and here, and they are set by me, but they're set for 1430. So at 1430, regardless, it'll close out any positions. Also, one thing I should probably mention, and if it's not obvious, but the system will only be in one position at a time. That must make sense, I hope. All right, so what I typically do at 1400 here is run through the backtesting idea and why and where I am, what I'm doing, why I'm doing all this. Quickly, you can have a look at the what's going on over here. So my philosophy is, and it's based on what I've learned from the most successful hedge fund people around in the world ever. Jim Simmons, for example. Tom Sosnoff, those kind of guys. the market is essentially a random environment, and the only way that, or the way they believe to approach it as a business, is to approach it from a probability and occurrences and the law of large numbers. So you identify a setup that happens frequently and the rules that validate the entry. You then identify the rules and backtest or capture a data set outside, a statistically significant data set, and determine what mathematically, statistically, does that setup and those criteria have an edge or not, or expectancy, or whatever you want to call it. If it does, then your mission as a trader, you're supposed to do all of that away from the live trading market, by the way. Makes sense. And then your mission as a trader is to take every one of those setups that present itself in the live market, and you rely on the law of large numbers to manifest that calculated or determined edge to your bank account. It's the same exact business model as the gaming industry from the point of view of a casino. They play no game on the casino floor, which they have not pre-identified an edge. When they put the game on the floor, their only mission in life is to play the game as many times as they can in 24 hours. That's why there's no emotion with any of those guys. They don't care. They know winners, gamblers will win. We know we'll take stop, and we know we'll win. We know we'll take stops. Same way, other way around. They know the secret is the law of large numbers manifesting and compounding that edge, percentage of edge, to their bottom line. And that's really all it's about. The first the trades I've done that with is initial balance trades. That's the high and low, and I've talked about it a lot today. Here's a perfect example. There's a first rule. I'm sorry, I'm not very creative about rules, and I call them rules because that's how they are referred to in IRT, so I'm just used to it. A, first rule, initial balance high. Pullback zone. B, what did I need now to enter this short? Any one of these to pull back, to trade back up to the trigger zone. And these, if you've got IRT, I'm happy to share these charts, no problem. But just, you can see over here, and here are the numbers if you want to calculate it yourself, but it's real simple. The continuation and pullback zones are 3 to 5 points below the initial balance line level, whether it's high or low. 3 to 5 points. The trigger zone is 1 point either side of the initial balance line level. And these are just arbitrary things that I cooked up with Rod, and I said about coding it up to test. Not some holy grail or, ancient Greek philosopher or Fibonacci or any of that. But one of the things I was laughing about today, and I do every day basically, look how many times these lines could be construed by a unscrupulous YouTuber to have some significant power. Look at the resistance there. Look at how many times we tested it. Look at how many times this was support. That's the confirmational bias. That's a problem in humans. Part of our DNA. It's got nothing to do with anything. These lines are just pulled out of my butt. Sorry, but pull the number out of my hat and went, okay, let's try this. Got nothing to do with anything mystical. So that's something that you need to be aware of. Anyway, I think, had I had the trigger, I would have been short, and the rest is history. So these are the rules that would define one of those two trades. And as I said earlier in the stream, I've sent these to this chart, and it will trade like right here, automatically when the rules are valid. And I've made real sure that this stays within the IRT simulated environment, because I don't want this system pushing trades to my AMP account, because I'm not set up for that with Bookmap, and I don't feel confident enough with the way I have this coded up. And this is my live AMP futures account funded by me. So, it's not a video game or a prop thing or something like that. So it matters. Anyway, the way I work it is, when I do have a trade that signals on the system, I manually replicate the trade over here in Bookmap and stand by the rules. Yesterday I took 2 losses, 2 stops. If I go a day without any setups, I don't take a trade. And as I was talking about earlier, this one here, I will correct the code here, because this is a filter that I hadn't really thought about. I think it's one of the few times I've noticed it occur. This is the POC. I am never going to take a trade within spitting distance of the POC. That is, diddling in the middle, and that's, in my opinion, stupid. So I'm going to make sure that that's coded up. The reason I say coded, because I want to back test these things, and in order to do it without discretion and with confidence, is to have the computer validate each of these rules over each 1 minute bar, looking back however far I tell it to back test. Then I know for sure that it's consistent. There's no discretion. There's no, oh, well, let's just, let's call this close enough, or let's, you know what I mean? None of that stuff. So that's where I'm at. Now, back testing. Set it up for 500 days. MES, 2 contracts, RTH session. These are the reports I want to look at. Set it up for 500 most recent days, looking back from 500 days to now. Stop and think of how long you think that might take you to do accurately. Scrolling back in the charts. Well, it took the computer 8 seconds to evaluate every one of these rules over every 1 minute bar, looking back for 498 trading days in the RTH session. That encompassed 223,285 bars. That's the gross. 1,139 trades. When, long, short. $772 winners, average 34.83. 218 stops, average 12.84. The difference between the total trades and the sum total of the winners and stops would be scratch. It's 37 consecutive winners and 6 consecutive losers. 2.71 risk win to loss ratio, and or expectancy, and in ticks, and then this is 67% win rate. And you can also, which is what I do when I'm not here, but you can also go through each of 1,154, however many trades it is, 1,139, each trade from the 23rd of January 24, every minute that you're in a trade, to the minute, and the outcome, including the entry, the exits, etc. And I don't see something here yet. Oh yeah, here we go. Here's T2. All right. And there's the financial outcome of it per trade. That's how you can actually capture data that can be meaningful for, that's actually vetting a trade, not, oh, I remember I won 10 trades last week with this kind of a setup pretty close. You know, that's what a lot of people say. Oh, it's about a vetted trade or a structured setup or a structured trade. That's not even close. Statistically, if it works, again, don't change it. But the next thing I do then is take it to this level right here. And this is, 102 lines out of, 102 lines. So there's about 95 or 98. Each one of these rows is a back test. I have it filtered because I was looking for a specific setup. Stop, T1, T2, number of contracts in the package, trigger if any, and how much the trail plus entry would be after the trigger. And the instrument. Now this is for December. Actual trading days. Here we have 495 trading days, 1,100 contracts. Here is for the previous 14 days of January. Did this last night or yesterday afternoon here in the stream. 12 tick stop, 12 tick target, 48 tick T2. When price reaches 12 ticks, which is T1, the trigger fires and the stop is moved to entry, break even. Actually, it's entry because break even is a scratch. And once T1 is achieved, when you have a risk neutral setup, stop equaling T1, then when you see that is automatically, without moving the stop, you're automatically at break even. So what this does is it trails to entry. And there they are. There are the stats right for all the world to see. Win rate, number of scratches, number of trades, winners, losers, average, expectancy, R factor, risk reward ratio, profit factor, trades per day, as much as I could come up with. And there's a bunch of stats I don't pull from. It's one of the other reports in RT that this doesn't mean much to me, to be honest with you. Sharp and Santino ratio and those, standard deviation. But these are the numbers. And I found by doing all these back tests that this looked like the most profitable and the best consecutive winners to losers ratio of any of them. So that's what I'm doing. That's what I consider to be a real back test and a vetted trade. Now you can do whatever your heart desires, but that's the way I look at it. And I think that's, again, this is not from what I think. This is, or what I dreamed up or, came to me in a vision. This is from understanding what a lot of these best, most successful traders have to say, and then also reading and studying about statistics and back testing and doing that kind of thing. So there you go. There you go. And I will stand by until 14:30 when I will do the recap, and 14:50 is the market on close imbalance. Again, I appreciate anybody coming by, stopping in, subscribe, thumbs up. If you would like to have these access to these session prices continuously from 1700 on Sunday evening through 1600 on Friday. I push them and provide them freely to anybody that wants them. Just like and subscribe and throw something in the chat, and I'll hook you up with the link. No problem. I'm happy to do that. Same way with the charting. If you use IRT, I'll be happy to share any chart definition. Not really anything you can do with bookmap, so there you are. But you get the point. I think Davos is pretty much wound down. I heard that, or saw somewhere in the news or someplace, that the American contingent, Trump and company, left early. They left already and are on the way back, and it was a day early or something like that. So I saw something about that. I'm not sure where, though. Maybe that was over here. I don't know. Maybe I dreamed it. Oh, this has got to have Kennedy written all over it. This thing here. They were talking about cell phone radiation when cell phones came out in about 1989, 90. A lot of that going on. I remember. No, I don't see any of that stuff, so I don't know where I saw it. Maybe, as I said, maybe I dreamed it out. Pretty sure not, but maybe it's over here. Would have thought it'd be in here, but I don't see it anyplace. Okay, maybe everything's, I know that the primary speeches are over with, so maybe they're just going to hang out and have fondue or something. Whatever. Well, I don't know. So we'll get into those. Get into the recap here at the bottom of the hour. Okay, the daily recap, eh? I don't even know what I'm thinking about here. Well, there we are. There's our day so far. There's Blue Boy over there holding the vigil at the open, and there's the open. Quite a auctioned balance mean reversion kind of day. Another view here. This is the. Oh, come on. Well, this thing is just doesn't like me for some reason. Then look at the. Maybe I've got a problem with an indicator that's choking on recalcs or something. I better check that out. Micro ES. Open. NQ. We're closing on our lows. Likely. Open, close so far. And market profile. We still have this flat top, which doesn't make me all, warm and fuzzy feeling, but there we are. This is the ES. Same story. These are the minis. NQ. Same drama over here. This is pretty weird. I just noticed that why that's doing that. I don't know. Why that is so non-responsive, I don't get. Compared to the, what's this? That's just as responsive as you would expect. I'll have to look into that. Okay. Anyway, so let's press on. Volume is light. Should be about 1.3. Let's see what we have over here. Well, 87%. That's, I guess, seems about right. And we're down to 2.75 or 2 and ticks per 1 minute candle. So the market goes down to go up, goes up to go down, goes down to go up, goes up to go down. Now what's going to happen? Who knows? I'll be able to include today's trade into this micro composite because it's very definitely overlapping. I will leave these separated. And yeah, let's look at what the news has got going on here. Well, anything earth-shaking? Tim Cook's going to be replaced at Apple, apparently. And he's busy tweeting state policy on Truth Social. That's pretty normal. So my news sources, in case you're not familiar, is investing.com, which is my go-to and preferred. Only reports known, typical, standard, scheduled, well understood economic reports and meetings. You can click, as I showed earlier, demonstrated earlier, you can click on any one of these links and you'll get the entire, there you go. You can get the whole background. Who puts that report out? You can click here, this link, it'll show you that report from them. What are they? There's some gal doing tricks over here. the whole history of the report is the best way to put that, I guess. And I like that. You can filter this for anything you want, and we are in earnings season. Remember that. So here we are, fast approaching. Well, earnings Friday is going to be Slumberjay. And then Baker Hughes is Sunday night. The little moon is after the close, and the star or the sun is before the open, obviously. And there's, next week. Getting into the biggies. Tesla, Meta. Wednesday's going to be some heavy stuff. Earnings season. All right. And of course, as you notice, this is free. That's why there's ads floating all over the place. The other news source that I use is Investing or Financial Juice. It has a similar docket over here, which I'm not crazy about the outcome or the look of it. But one thing they do that I really appreciate is they pick up throughout the day random non-typical economic events which may have a big impact on the market, like Trump is going to speak about something, or Bassett or somebody like that. And those will find their way in here as soon as they can get them, and it'll look like this. That I appreciate very much. The right side over here is a more of a squawk box, and this is where we'll see the market on close imbalance. Orders at 1,500. I mean at 1,450. Jesus, I am tired. So that's pretty much where I'm at for the recap. It was a basic, sloppy day. I am sure that a lot of people got chopped up. It's a wide enough range that, sure, you could have made money, 69.25 to 69.70, say, so 50 handles. Could have made money for sure. If you had a vetted setup for one of these, I'm sure you're happier than a pig in the mud, but I didn't have anything trigger. As I talked about in the at the time, I guess is the best way to put that. I consciously decided that I was not going to take this trade because it was counter trend to me, and it was right on the POC. Now that's a filter that I'll add in here. I realized very definitely that using discretion to not take a signal or a vetted trade is stupid. You've just completely eviscerated all your hard work for backtesting. But in this case, I recognized early on, and we talked about it here in the stream, that this was something I was not going to do. And I've never had this happen to me where I've noticed this before in the past 3 months since I've been vetting these trades. POC is so close to price action, I'm not going to do that in the direction of the POC. So I'm going to put a filter in here into the rules that take care of that. And over here this afternoon, I had a structured trade away from the POC had I gotten a trigger. Still pretty close to the POC, but when we're under it and bouncing up to it, I'm not too disappointed that I didn't get a trigger, because I would have had to think about that one. But that's where it's at, and we'll see just a day without a trade. Yesterday was 2 stops. Not anything I'm crazy about, but I'm taking the trades as I can, and as I've committed to. When I have a signal that I'm going to take that's traded over here, I manually put it on the book map. So there you go. Have a great rest of your day. Remember that the most important piece of equipment you have in your trading office is you. All the time and money and effort we spend on monitors and software and data feeds and indicators, this and that, and up and down and back and forth. Meaningless if you can't see the screens. Your eyes bring all that data in, your brain processes all that data, and you use that information to make financial decisions that will affect you and your family for perhaps the rest of your life. How much more important could that be? Make sure you take care of yourself. Make sure you are well rested. I'm trying to find something here, and we all know that I can't do two things at once. So, hold on a minute here. Let me find it. There we go. This is for the timestamp as well. I want to get all these things in the chapter markers as I can. Because, you know, think about it. These streams are 7 hours long. I'm not going to go through all 7 hours to see something I want. So I'm real careful about trying to get those chapter markers accurate. Anyway, back to you are the most important piece of equipment you've got in your office. If you can't see the screens and bring that data in with your eyes and process it with your brain and make financial decisions and actions about it, you're out of business. Be sure you're well rested. Be sure you're hydrated. Don't ever come in to trade on tilt. You know, don't go out and get hammered till 3 a.m, come home and have a fight with your significant other and expect to get up for the open and do anything good. This is probably not going to happen. You know, every day, get out and rest your eyes. Staring at these screens all day, our short focus eye muscles are in constant contraction. You need to get outside and look down the street, peek over the backyard, whatever it is you do, to focus, soft focus in the distance. Rest your eyes. Get some natural light. A little UV is good. Exercise. Stay healthy. We are in a business where our competitors, the higher time frame traders, are some of the most well-educated PhDs floating around, and they are unquestionably the best funded. They come into work every day with one job in mind, and that's to take as many dollars off of anybody else that's trading as they can. They don't care who you are, where your stops are, or anything else. So you better be on your A game. That's for sure. Now, we're going to be having our little market on close imbalance here. And that will be at 1450, so it's about 2 minutes. Thanks a lot for coming by the stream. I really appreciate it. Trading is a lonesome endeavor, you know. I stand here by myself in this office in front of all these screens from around this morning was quarter to about 5:45, about quarter to 6. And I'll be here till probably somewhere around 2000, 2100. And I do that. I start, as I said, bring all my machines back up and get everything logged on and pushing at Sunday night at 1700, and they run pretty much nonstop until Friday night, 1600 at least. The session prices do, and that's when the data stops, and I don't even turn my machines off and reboot everything until Saturday. So I do my back testing and that work on away from the market hours. That's what I do in the evenings and early in the mornings and on the weekends. So it's a full-time job. Let's see, here's Davos full day. That's what I was talking about. Okay, so Davos is closed today. Oh no. Yeah. Davos opens up tonight, our night over here at 2300 and goes all day. So there'll be They'll be talking tomorrow. They'll be talking. They will be meeting all day tomorrow, except the. Oh, look here. We got University of Michigan coming out tomorrow, and that's always a biggie. PMI manufacturing. I don't know why I didn't see those. Wait a minute. I got this all screwed around. 22nd, 23rd. I don't know what day it is half the flipping time. Let's see what this has to say. I don't like this new format, as I've said about a zillion times, but hey, it is what it is. Aha, that's the deal. There we go. Michigan, S&P Global PMI. Yep, there's tomorrow. That makes a little more sense. Okay. There's our market on closing balance. Right here, not much of a take. We'll have the market on closing balance numbers right there. So it's 502 million buy side S&P, 384 million buy side NAS, 20 million sell side the Dow, and 83 million buy side the Mag 7. In case I didn't have that right screen selected, this is tomorrow's economic calendar. So there you go. Take care of yourself. I'm going to be shutting this off at 1500 as usual and close the stream down. And I will be back up bright and shiny as every day at 8 o'clock in the morning for the stream. I continue to go here, of course, after the stream, but tomorrow morning at 0800 for the pre-market and the setup of everything and the market bracket orders and pro execution and all of that stuff. And it will definitely be tomorrow morning. Oh, and it's Friday. TGIF, boys and girls. So it's supposed to get colder than hell around here. We're supposed to get 19, which is about -7 over this weekend, I think. So I got to think about pipes and outside animals and whatever else starting tomorrow. Got to confirm that weather, but there you go. So we've got 7 minutes. I'm going to just barely, watch her wind out here. See if we get a market on closing swing trade, they call it. They're going to try as hard as they can to get this thing right back to open, and that will mean that this entire day and all the money won and lost will have been exactly scratch. They bring it up here. 10 handles is not far to go. Okay, 3 minutes or something like that, I guess. All right, so we're coming into the closing moments here. This is one of my favorite tunes. It's called Black Lipstick Blues. I actually put my headset on to listen to this one. My office is quiet. I don't have speakers in here. Funny, I know. I want to hear the audio portion of this thing. I have to stream. I have to put on my headset. Okay, 30 seconds or so. By the way, I guess you probably noticed that I stream the entire monitor so that any open programs, the computer clock, hours, minutes, seconds, ties up with Bookmap and IRT, just more transparency. And there we have it. Have yourself a fine rest of your trading day. Get all ship shape and ready to go for TGI Friday, and get away from the screens, rest your eyes, do something healthy for yourself. And I'll be bowing out of here